Streaming stocks are looking to reset after a rough year as the industry shifts focus from aggressive expansion to more sustainable growth. And joining me to discuss the evolution in the media sector and what it means for investors is John Harrison. He heads the Global Entertainment and Media Division at EY. And John, it's so great to see you again. And I think the key words for the industry here are reset and reinvention. What exactly does that entail, and what are you seeing?
Alexis, it's great to see you as well. And I think you're exactly right. There is a thematic shift that has taken place in the industry over the last 12 months. And media leaders and media companies are really shifting from a mindset of aggressive growth and aggressive investment to one of a more disciplined agenda focused on profitable growth. It's really balancing that growth ambition with the generation of cash flow in a tougher environment.
There is this reset happening right now, and I think investors for sure are more interested in seeing more sustainable growth being delivered, not so much just a pile of cash being thrown at things, but how exactly are streamers adjusting their operating models or their strategic goals to really deliver this more stable growth?
Yeah, I think what's driving the shift is an evolving set of consumer behaviors. Consumers, we've seen it for quite some time now. Consumers are in control in a direct-to-consumer environment. They're much less sticky. So streaming services, one of the great value propositions is you can churn on and churn off. You can turn it off and on almost within a monthly basis. Consumers are also facing tighter budgets. It's a tougher economy. Inflation is impacting all of us. And the media companies are facing intensifying competitive pressure. And that is all wrapped up with this investor reset on valuations and a focus on the long-term profitability of this new generation of media. So companies are approaching it in a few different ways. Number one, philosophically, it's a view that reinvention never stops. And it has to be married up with the right strategy for today's day and environment with execution excellence. 47% of media leaders that we surveyed in our recent research report believe that they have to reinvent their business model completely to meet the challenges and the opportunities in the marketplace today. So really, that's half the industry that's looking to make major change.
And you talked about some of the consumer expectations that are changing with increased adoption. But looking at the larger macro environment, as you mentioned, we have a very uncertain economy. Everyone's gearing up for this recession. How is that playing into certain spending decisions, and what are the different types of headwinds affecting streamers as we head into this kind of bumpy road here?
Yeah, I mean, I think consumers are absolutely focused on the monthly budget in total, and media at the end of the day is a somewhat discretionary expenditure. And with the new flexibility that consumers have to consume media a la carte, it enables them to have that level of flexibility that creates volatility in the media company's results, or at least more volatility than before, since streaming has become such a meaningful part of their revenue base. Media companies are looking at this operationally first and foremost and making sure that they have the right operating model to drive a scaled streaming business, but also drive that profitably. 50% of media leaders that we surveyed are focused on efficiency and taking costs out of the business. And that's reducing discretionary spend, it's reducing headcount, it's centralization, it's simplification across the entire organization to make sure that as much of every dollar of revenue that's generated is flowing into that profit line and then can be deployed efficiently towards either future growth or other capital priorities.
Right. And I think we've seen these cost-cutting measures and also this shift to bring more ad revenue in, which it's an interesting time right now, considering that ad spending is also on the decline a bit as the economy is in a rocky place. What are some of the options for streamers there to not only cost cut, but maybe grow revenue?
Yeah, customer centricity, we think, is the core organizing principle, or the core operating principle. And in a direct-to-consumer world, you have to delight those customers constantly because, as we've been talking about, they can just churn right off. A big part of that, of course, is content. So the content investment that media companies have made and accelerated over the last handful of years will continue. But it's also making sure that the offering is priced the right way, the technology is easy to use, and the support, to the extent there's customer support needed, is convenient to access. We think also that consumers are going to be pushing, the media companies are going to be pushing more into bundled offerings. So bundled could be the integration of discrete streaming apps into one single larger super app that has more content, with a goal of keeping that consumer on the platform longer and more engaged. You could drive a discount through a bundled app, and you can also link in other offerings that you may have in the portfolio. Could you have discounted theme park tickets? Could you find a way to get a consumer to the movie to see your movie studio's new product that also ties back to the streaming offering? Or can you partner with a third party and tie your streaming service to an e-commerce offering or a fitness offering? We've seen this embedded completely with the largest tech companies that have streaming video almost as a bolt-on to whatever their core business is. Media companies have to repeat or replicate something similar to make that value proposition compelling for consumers.
It's been very interesting to see this industry evolve, especially, we've talked to you at CES over the last few years. There's definitely more players in the field, a lot more options for consumers. But what are some of the key takeaways for investors here who are interested in this sector, and maybe some of the main things that you're focusing on in the near term that might separate streaming winners from losers?
Yeah, I think investors need to know that the media leaders today understand this environment. Almost 90% of the respondents to our survey said we actually have clarity on where the industry is going, and we're working hard to reposition our businesses or reinvent our businesses to align with the current environment. So the actions companies are taking around their operating structures, their cost structures, their focus on cash flow are the right actions that will position themselves for success down the road. I think the other thing, Alexis, to talk about here is the strategic makeup of the industry. It's been an industry that has thrived on M&A over generations, and I think that sort of activity will continue. The biggest transactions right now are more difficult because the capital markets are volatile, because the regulatory environment is certainly less certain from an M&A perspective, and because we've had deals that have been done that are still getting integrated. But the activity hasn't stopped, and some of the biggest players are making really smart moves that just stop short of full M&A. So whether it's partnerships or joint ventures or commercial alliances, whatever path they can take to enter markets quickly on a capital efficient basis, these companies are looking at those options.
Well, John, thank you so much for your insights today. It's always great to catch up with you.
Thank you, Alexis. Good to see you.
And you can head on over to investors.com for more of our media and tech coverage. For Investors Business Daily, I'm Alexis Garcia.